For the 13.3 work together problem, we are going to talk about preparing payroll records. There are two types of payroll records that we are going to prepare. We're going to prepare a payroll register, and we're going to prepare an employee earnings record. They're very similar except for the last column. If we take a closer look at this payroll register, it pretty much has all of the information that we've talked about so far in this chapter. The regular and overtime hours and total hours for each employee are in these earnings columns. The regular earnings, overtime earnings and total earnings based on the hours that they worked has previously been calculated. For these employees, this is their marital statuses that we're going to use to calculate the income tax withheld, as well as their number of allowances, withholding allowances, which is also used to calculate the income tax withheld. So then in these next these next three columns are the deductions that we calculated in the previous section. The federal income tax, which is based on that table, you have to figure out the married or single status of the employee and then go to that particular table using their total earnings for that pay period. And then remember that Social Security tax was 6.5% of the total earnings for that pay period. Medicare tax was 1.5%. This is also health insurance. The health insurance can vary per company. It is something that is decided upon in a contract when you apply for health insurance. There's also an other. Some situations where there might be other is if we look at step 9. It says that entries that are so sometimes like bonds could go in there, contributions from bonds, and other things. But that's going to be something that they specifically tell you to do if there is an other. Then you total your deductions. Notice this is the deductions section. You total all the deductions for that particular employee and put the total there. And then the net pay is calculated by subtracting the total pay for the period minus the deductions, gets you your net pay, which is actually like your take-home pay, what you get to bring home, and then the check number that was written. So this is what somebody who works for payroll, who is in charge of cutting the checks for the employees, this is a document that would be familiar to them. The next document is a employee earnings record, and if you notice, a lot of the things are similar. The heading's a little bit different. The first column's a little bit different. It doesn't have the withholdings or the marital status, but it's got the earnings information. It's got all the deductions information. It's got the net pay. Now the difference is it's talking about accumulated earnings. So what they would do is they would take the previous amount of earnings that this employee had and they would add this net pay to it. So it's just to let an employee know or let payroll know what that employee is up to at that given time of the year. So if we look at the work together directions, we're going to complete payroll register entries for Judy Hensley and Mike McCune for a semi-monthly pay period ended July 15th, 2015, or whatever this current year is. We are going to be on page 287 of the journal. We're going to use the tax withholding tables from the previous section, the tax rate for Social Security of 6.5% and for Medicare 1.5%. It says that neither employee has reached the tax base. For each employee, withhold $60 for health insurance and $15 for U.S. savings bonds per pay period. Basically, they haven't, you can still take taxes out. That's basically what that means. So if we look at this section in our journal, we've got Judy Hensley and Mike McCune. We have to write the date up here that the pay period ended. The semi-monthly period ended, and it said that it was July 15th. So let's put that in. 2015. And let me just make sure of something. Okay. The date of payment will be the same. Which is over to the side. We have their marital statuses. Judy's married, Mike's single. Judy has 2 withholding allowances and Mike has 1. Judy's regular earnings were this for this period and her overtime earnings were this, let's calculate their totals. That will be pretty simple right away. 1,040 plus 39 gives us 1,079. 920 plus 51.75 gives us 971.75. Now we calculate their income tax based on that table in our textbook. So if we flip back to page 318 in our textbook and 319 in our textbook, Judy's married, so we have to focus on this table over here. Her total pay we just calculated for this pay period was $1,079. So that's going to be located between the $1,060 and the $1,080. She has 2 withholding allowances, 0, 1, 2. That's an $87 deduction for federal income tax. We can just go through and do all of Judy's deductions. Social Security tax is 6.5%. Remember, we need to use that 0.065, multiply it by the total earnings. 0.065 times 1,079 equals $70.14. Medicare tax of 1.5%. 0.015. It's going to be a $16.19 deduction. And health insurance, they told us in the Work Together problem what to deduct for health insurance. It said that for each employee, withhold $60 for health insurance and $15 for U.S. savings bonds. So we need to withhold $60 for health insurance for both, so we might as well just write it in both, and $15 for U.S. savings bonds. Okay. Total deductions would be found by adding all those deductions. So let's do that for Judy. She's got an 87 plus 70, 14 plus 16, 19 plus 60 plus 15. $248.33. Her net pay is found by subtracting her total pay and her deductions. So we need to do her $1,079 minus her deductions of $248.33 to get $830.67. And the check number is going to be, does it say? We'll just go with check number. I may have to fix this. Since I don't see something, I'm just going to put check number 1. We may have to go back and fix that. So we have Mike McCune. He's single. We already calculated his total earnings for this pay period. We have to calculate his federal income tax, so we have to use those tables. He's single, and he has made $971.75. Single, 971 is within this range, and he has 1 withholding allowance, 0, 1. That would be $112. Notice he has less withholding allowances, so they take more out from him. His Social Security tax is found by multiplying 0.065 by his total earnings. $63.16. His Medicare tax rate is 15% of his total earnings, so 1.15 times 971.75, $14.58. We already brought down the $60 for his health insurance and $15 for the bonds. We have to total his deductions. So we have 112 plus 63.16 plus 14.58 plus 60 plus 15. $264.74. We find net pay by subtracting the total pay from the pay period minus the deductions. $707.01. Let's call that check number 2. Okay. Now we're going to complete the earnings record for the pay period. Let me just get back to my work together problem. It says, prepare a quarterly earnings record for Miss Hensley for the quarter ended September 30th, 2015, and enter the July 15th payroll information. Miss Henley's employee number is 5. The rate of pay is $13, and Social Security number is that number right there. We'll refer back. Her position is a sales clerk, and her accumulated earnings at the end of the second quarter are $13,520. So we're going to need to add to that to find her new earnings. So we're doing this for Judy Hensley. We have her employee number, they said in the directions, is 5. Actually, I will do this on a separate video.